Hello again, Ian Maddox, Hitchcock Maddox Financial Partners. Welcome to another session of the HMFP Q&A. As I have said in the past, our focus is financial planning simplified, and one of the ways that we try to simplify financial planning is providing good information, because we believe that good information helps people make better decisions. Today's question comes from Kristen L. in Chapin, South Carolina. I've never been to Chapin, but I have been to South Carolina. Kristen, thank you so much for the question. We appreciate it. For those watching this video, click below, submit questions, and we'll answer all of them. Again, we answer one a week on video, and Kristen, you watch your mailbox because we've got a Starbucks gift card coming your way. This is a good question. This is kind of a foundation of financial planning. The question is, how much life insurance do I really need? Let's compartmentalize this. Life insurance, really, in a simple way, and you can get pretty complex with it, but let's keep it simple for today's answer, to me serves two purposes. Either it's offsetting an immediate risk that we have, or it might be used to transfer money to a future generation in a tax-efficient way. I'm going to focus really on the first one. The second one, there's just a lot of nuance to it, and so I probably won't bog down into that, but just understand, and I may address it briefly here at the end. But when it comes to life insurance, and there's a lot of opinions on this, okay? And so it can be a little confusing depending on who you talk to. If you go to a life insurance agent, you might get one answer. If you go to a financial planner, you might get another. If you go talk to your parents or some other wise person that has more experience than you, they may give you a third answer. But generally speaking, the way that I look at it is life insurance is a risk mitigator, okay? So what is risk in your financial life? Kristen, I don't know what your age is, but let's say that you're under 40 or 50 years of age and you have kids. Well, one of the risks you have is that you have minors that can't care for themselves, right? And so you may have debts. That's another risk. You may have a mortgage. You may have credit card payments, car payments. If your life ended today, what obligations are going to be left to the next generation or to whoever has to pick up the pieces, right? That could be your parents, that could be siblings, it could be a friend, a family member, a trusted party. What obligations are they going to have to fix in your absence, financial obligations? So that's probably the baseline, is to say, look, I don't want to die and leave a financial obligation, a financial mess, so to speak, for it to be cleaned up upon my passing. So having enough life insurance to cover all of that would be the baseline foundation. From there, then you can start to layer in goals, financial goals. Again, let's assume you're under 40 or 50 years of age, you've got some kids, or you're thinking about kids. What are some financial obligations or goals you might have for them that you'd like to produce or would produce if you were still alive? That could be college savings, that could be income of some sort to provide for a period of time until they can care for themselves. So then you start to layer in how much insurance you need. Sometimes people will just give a simple answer, but it's not a simple answer. It has to be based on your specific circumstance. How much income do you have? How much debt do you have? How many goals would you have for people that you're responsible for now? And lastly, this is important, how much can you afford? Because you may have debt and goals that outstrip your ability to pay for insurance to cover all of them. And that's where the rubber meets the road. So having some insurance is better than no insurance. So that's one encouragement that I would pass along, is to say that even if you can't cover all of the things that you'd like to cover, having something is going to make it a lot better. So, and this could be, married spouses. For example, you may have one spouse that makes a whole lot more income than another. So that's one thing to consider. Kids are another thing to consider. College savings, other obligations that you want to absolve or get rid of, if you were to pass, are all things to look at. So life insurance as a baseline is making sure that all of your obligations aren't left for someone to have to worry about. Then from there you can layer on goals. So I hope that answers your question, Kristen. Thank you so much for submitting it. Keep them coming our way. We'll continue to answer. Have a great afternoon. Talk to you soon.